Hey everyone, welcome back to Delta Edge, your ultimate guide to the stock market. Today, we're diving into an exciting topic. What are the top mutual funds to invest in 2024? Whether you're a seasoned investor or just starting out, this video is packed with insights, tips, real-time data, and examples from the Indian stock markets, NSE and BSE. Let's get started. All right, let's kick things off with a powerhouse in the large cap space, the SBI Blue Chip Fund. Now, when you're talking about blue chip companies, you're talking about the heavyweights, the established giants of the Indian stock market. We're talking companies with solid track records, strong financials, and a reputation for weathering market storms. The SBI Blue Chip Fund has consistently been a top performer, and for good reason. Over the last 5 years, this fund has delivered an average return of 12%. That's right, 12%. Now, past performance isn't a guarantee of future returns, but it does give you an idea of the fund's potential. And who's the mastermind behind this impressive performance? That would be the fund manager, Sohini Andani. She's got years of experience navigating the market and picking winners. Under her leadership, the SBI Blue Chip Fund has consistently outperformed its benchmark. Now let's talk about what's inside this fund. What are the key holdings? Well, get ready for some familiar names. HDFC Bank, Infosys, Reliance Industries. These are some of the biggest and best companies in India, and they make up a significant portion of the SBI Blue Chip Fund's portfolio. But what's a good investment without a little technical analysis, right? Well, looking at the charts, the SBI Blue Chip Fund has shown a strong uptrend in recent months. We're seeing solid support at 40 rupees and resistance at 50 rupees. This suggests that the fund is poised for further growth in the coming year. But before you jump in headfirst, remember, every investment comes with its own set of risks. And with an expense ratio of 1.25%, it's crucial to weigh your options carefully. But hey, that's why you're here, right? To get all the information you need to make informed investment decisions. Looking for serious growth potential? Look beyond the big players. Explore the exciting world of mid-cap companies. These companies are on the rise, with potential to become market leaders. Enter the HDFC Mid-Cap Opportunities Fund, targeting mid-cap companies poised for explosive growth. Companies with innovative products, strong management, and a hunger to disrupt. Over the past 5 years, the fund has delivered an average return of 15%. Mid-cap stocks can be more volatile but offer higher returns. Led by Chirag Setalvad, a seasoned investor with a knack for picking winners. Key holdings include Voltas, Jubilant Foodworks, and Astral Polytechnic. High-growth companies in the fund's portfolio. Remember, investing in mid-cap stocks comes with risks and an expense ratio of 1.35%. Chapter 3. Mirae Asset Emerging Blue Chip Fund. Catching the next wave of blue chips. Now, let's talk about a fund that's all about identifying the next generation of blue chip companies, the Mirae Asset Emerging Blue Chip Fund. This fund focuses on companies that are on the cusp of greatness, the ones that are showing all the signs of becoming tomorrow's market leaders. The Mirae Asset Emerging Blue Chip Fund has a proven track record of identifying and investing in companies that are poised for significant growth. Over the past 5 years, this fund has delivered an average return of 18%. That's right, 18%. Now, who's the mastermind behind this impressive performance? That would be Nilesh Surana, a fund manager with a deep understanding of the Indian stock market and a knack for identifying emerging trends. He's got a proven track record of picking winners, and his leadership is a key factor in the Mirae Asset Emerging Blue Chip Fund's success. So, what kind of companies are we talking about here? Well, the fund's key holdings include names like ICICI Bank, HCL Technologies, and Axis Bank. These are companies that are already making waves in their respective industries, and they're only expected to grow stronger in the years to come. From a technical analysis standpoint, the Mirae Asset Emerging Blue Chip Fund is currently in a strong uptrend. we're seeing solid support at 70 rupees and resistance at 85 rupees. This suggests that the fund has strong momentum and is poised for further growth. But remember, every investment comes with its own set of risks. And with an expense ratio of 1.50%, it's essential to carefully consider your investment goals and risk tolerance before investing in any fund. Chapter 4. Axis. Short-term fund. The stability play. Now, let's shift gears a bit and talk about a fund that's all about stability and consistent returns, the Axis Short-Term Fund. This fund is perfect for investors who are looking for a safe haven for their money, especially during times of market volatility. The Axis Short-Term Fund invests primarily in short-term debt instruments like government securities and corporate bonds. These investments are generally considered to be less risky than stocks, making them a good option for investors who are looking to preserve their capital. Even though it's considered a low-risk investment, don't underestimate its potential for returns. Over the past 5 years, the Axis Short-Term Fund has delivered an average return of 7%. That's right, 7%. While it might not sound like much compared to some of the other funds we've discussed, remember, this fund is all about stability and consistency. And who's the steady hand guiding this ship? That would be Devang Shah, a seasoned fund manager with a deep understanding of the debt market. He's known for his conservative approach to investing, which has helped the Axis Short-Term Fund deliver consistent returns over the years. Now, from a technical analysis perspective, the Axis Short-Term Fund has shown remarkable consistency. We're not seeing any wild swings or dramatic movements. Instead, we're seeing a fund that's slowly but steadily moving higher. And the best part? The Axis Short-Term Fund comes with a very reasonable expense ratio of just 0.75%. So if you're looking for a safe and stable investment that can generate consistent returns, the Axis Short-Term Fund is definitely worth considering. Chapter 5. ICICI, Prudential Equity and Debt Fund. The best of both worlds. Finally, let's talk about a fund that offers the best of both worlds. The ICICI Prudential Equity and Debt Fund. This fund invests in both stocks and bonds, providing investors with a balanced approach to investing. This balanced approach is designed to minimize risk while still providing the potential for growth. By investing in both asset classes, the fund aims to cushion the blow during market downturns while still participating in market upswings. And the results speak for themselves. Over the past 5 years, the ICICI Prudential Equity and Debt Fund has delivered an average return of 10%. That's right, 10%. That's a pretty solid return for a fund that's designed to be relatively low risk. Now, who's the mastermind behind this balanced approach? That would be Sankaran Naren, a highly respected fund manager with a long and impressive track record. He's known for his ability to navigate different market conditions and deliver consistent returns for his investors. So, what's in this fund's portfolio? Well, it's a mix of blue-chip stocks like HDFC Bank and Infosys, along with a healthy allocation to government bonds. This mix provides investors with a well-diversified portfolio that's designed to weather market storms. From a technical analysis perspective, the ICICI Prudential Equity and Debt Fund is currently in a steady uptrend. We're seeing solid support at 55 rupees and resistance at 65 rupees. This suggests that the fund is continuing to attract investor interest and is poised for further growth. But remember, even with a balanced approach and a seasoned fund manager, investing in this fund still comes with risks. And with an expense ratio of 1.20%, it's crucial to carefully consider your investment goals and risk tolerance before investing. If you found this video helpful, give it a thumbs up and subscribe to Delta Edge for more insights into the stock market and investing. And don't forget to hit that notification bell so you never miss an update. Got questions or thoughts about mutual funds? Drop them in the comments below. Remember, this video is just the tip of the iceberg when it comes to understanding mutual funds. It's crucial to do your own research, consider your investment goals, and consult with a financial advisor before making any investment decisions. Thanks for watching and happy investing.